Do you have RSUs or restricted stock units and you're not quite sure what to do with them once they vest? In this video, I'm going to share 3 strategies that you can use to maximize your RSUs, plus a bonus tip on taxes that could save you from surprises. If you're a software engineer or you work in sales at a tech company or you're VP at a Fortune 500 company, you probably have RSUs, and that could be a big part of your compensation. So we have some clients who work in Facebook, JP Morgan, Amazon. They might have $30, $50, or $100,000 in RSUs that they get per year. We have a new client that is a software engineer at NVIDIA. He gets around 150K of RSUs a year. So that's a big part of your total compensation. Now, once your RSUs vest, what's the right move? Should you keep them? Should you sell everything and use it elsewhere? Or should you reinvest the proceeds and invest elsewhere? What exactly are RSUs or restricted stock units, and how does it work? RSUs or restricted stock units are company stock that you get as part of your compensation, and they typically vest over a certain number of years. Typically, it's around 4 years. So let's say you work for Amazon and you just got an RSU grant award of about 2,000 shares, and let's say the Amazon stock price is worth $200 per share, and so that's worth $400,000 of extra compensation. Now, you're not going to get all of that immediately. For Amazon specifically, only 5% of that RSU grant vests after the end of the first year, and another 15% vests at the end of second year, 40% vests at the end of the third year, and the remaining 40% vests at the fourth year. So how does that work in reality? Once a round of your RSU vests, you're going to see those shares in a brokerage account that they will have opened it up for you. So it could be Schwab, Fidelity, or Morgan Stanley. So let's say 100 shares of your total $2,000 of Amazon shares, it vests today, and you're going to see those 100 shares in your brokerage account, let's say in Fidelity or JP Morgan. Now, let's go ahead and dive into the 3 strategies that you can use to maximize your RSUs and the pros and cons of each. Option number 1, keep your RSUs. Just hold on to them. So let's say you work for Google or Microsoft and you get Google or Microsoft RSU stocks. You can just hold on to them, and if it performs really well or if it grows faster than an S&P 500, then you will have made a lot of money. What are the pros of holding on to your RSUs? If the company does really well, then you benefit from a higher stock price of your RSU stock. You are working for that company, so whatever advantages or successes that you can generate that helps propel the company to new heights, then you and the company's interests are aligned with each other. I have a client who held on to her Accenture RSU stock for over 20 plus years, and she did really well on those Accenture RSUs. Now, the biggest disadvantage of this strategy is the risk, because most of your money is going to be concentrated in just one single stock. And if something happens to that company, let's say they hire a bad CEO or they're going to start losing ground to their competitors and the stock of that company tanks, then your money and your net worth also tanks with it. Stocks and individual stocks can go down by 20, 30% or 40% or even more in a single year or over time. So it can be really risky holding on to all of your RSUs. Strategy number 2 is you can sell your RSUs and reinvest them in index funds. Now, what exactly are index funds? This is a fund that you can invest in after you sell your RSUs, where you can invest in hundreds or even thousands of companies just by buying that one single fund. The most popular index fund out there is an S&P 500 index fund, where you buy that particular S&P 500 index fund and you're automatically invested in the 500 most profitable companies, large companies in the United States. Now, there are several other index funds that you can potentially invest your RSUs in. There is a European stock index fund where you can invest automatically in successful European companies like Shell, HSBC, or even Japanese companies or South Korean companies like Toyota or Samsung. Louis Vuitton, for example, is another European company that will be part of a international stock index. You can also invest in an emerging market stock index fund. So those are companies that are doing well, but they happen to be listed or based in an emerging market company or emerging market country like China, India, Brazil, South Africa, and typically emerging market countries grow faster. If you've heard of Taiwan Semiconductor, TSMC, they are the biggest manufacturer of the chips that are designed by Apple, Nvidia. So the chips that are in your phone, that are in your computer, those are probably made by Taiwan Semiconductor. And that's not going to be in an S&P 500 index fund. That's going to be in an emerging market stock index fund. You can buy a small cap index fund. You can also buy a bond index fund if you want more stability in your portfolio. So there's just so many options that you can do in this strategy that can help you create a well-diversified portfolio that's less risky than option number one, and could also help you continue to grow your wealth. Now, what are the cons of this? You'll have to do some research and to know exactly what index funds to buy, and you will also have to go in and sell your RSUs and buy those index funds or enhanced index funds. I forgot to mention that that's another option, enhanced index funds. You actually have to go in and buy, research and buy those funds every time your RSUs vest. And the other con or downside is if your company stock does really well, better than your index funds, then you lose on that opportunity. By the way, if you're finding this video helpful, hit on the subscribe button so you can continue to get more tips on how to grow your wealth. And if you're considering looking for a fiduciary financial advisor to help maximize your RSUs, you're welcome to schedule a free discovery call with one of our CFP advisors. So what is the third and last strategy that you can use to maximize your restricted stock units or RSUs? The third option is you sell your RSUs and use the cash for your goals today. You can do all sorts of things with your RSU proceeds. So let's say you've been wanting to buy a house, you've been renting for a while, or you already have a house and you want to buy a bigger house because your family is expanding, or you've been dreaming about buying a vacation house by the water. These are things that you can do with your RSU proceeds to finance your 20% down payment. Maybe you have one or two children and you want to help fund their college education. You can use some of your RSU proceeds to fund their 529 college education fund. If you invest in the right 529, depending on the state where you live in, you can even get state tax deductions from your 529 contributions. If your car is about to die and you need a new car, you can also use your RSU proceeds to buy a new car. You can plan a trip to Paris. There's so many things that you can do with your RSUs if you sell them. And so this is the biggest pro for this strategy. You can hit one or several financial goals in one swoop or in a single year or two with this strategy. And the biggest con for this is that there might be a temptation to use it for other non-essential items that will not actually contribute to growing your wealth over time. And again, if your company stock does really well, and then so you lose all the upside of that by selling it. So what should you do to maximize your RSUs or restricted stock units. There is really no one size fits all approach. The best choice really depends on you, who you are, your goals, how much risk you're willing to take. Are you comfortable holding 90% of your net worth in one single stock? Most of the time, at least for our clients here at District Capital, it's going to be a combination of 2 or 3 of these strategies. So a recent client that we started working with, she has over $300,000 in Microsoft stock. And so what we decided to do after some analysis and working with her is we decided to sell some of those RSUs to hit some goals that she wanted. So she wanted to pay off her car loan. She wanted to replace her roof. It's about time, and that can cost, easily maybe $20,000. We also decided to sell some RSUs so she can diversify, and we recommended 4 to 5 enhanced index funds for her portfolio and use some of it to fund her Backdoor Roth IRA. We have a separate video on Backdoor Roth IRAs if you're interested in that strategy. And she also wanted to keep a small portion of her Microsoft stock. So that's going to be part of our RSU strategy. Now, I promised a bonus tip, and here it comes. Bonus tax tip. Will you get hit by a huge tax bill if you get RSUs? How exactly are RSUs taxed? Most companies will withdraw 22% of your RSUs for federal income taxes. So if you're at the 22% tax bracket, then you're probably going to be fine. But if you're going to be in the 32% tax bracket, then you might get surprised with a good amount of tax bill next April, unless you plan ahead. So it could be you might decide to withhold a little bit more per paycheck in federal tax withholdings, or you might want to do federal estimated tax payments. So these are essentially tax planning that you can even work with a financial advisor. So for example, we help our clients do tax planning for those who have RSUs to make sure that they don't get hit with a tax bill, as well as help them invest in index funds and decide on which of the 3 strategies would be the best for them. If you hold on to your RSUs and it appreciates in price and you sell it sometime in the future, you will need to pay capital gains taxes on that. It could be 0%, 15%, or 20%, depending on your capital gains tax bracket. So there you have it, 3 ways to maximize your RSUs. You can either hold on to them, you can either sell and reinvest the proceeds into index funds or enhanced index funds, or you can sell and use the cash for your financial goals. Each has pros and cons, and the key really is picking what would work best for your financial situation.